Good day, guys. Welcome back to my channel. And today we'll be talking about inducement. I'll not only be talking about inducement, we'll also be talking about how to validate inducement liquidity. You can have the perfect market structure, the perfect direction. And if you get your inducement wrong, you could definitely lose a setup. So let's get into the video. So today I'll be focusing on inducement liquidity, and there are two types of inducement liquidity. We have the complete liquidity and the engineered liquidity. So for the complete liquidity, let me use breakup block as an example. Complete liquidity is when the inducement breaks structure, and the incomplete liquidity or engineered liquidity is when the inducement doesn't break structure. Instead, to just move a certain amount in price or in percentage, depending if you're measuring to Fibonacci, just move a certain percentage, then come back, tap into the point of interest, then it moves to the initial direction. So let me draw it for the other block. This is for the other block. This is the complete inducement, and this is the engineered liquidity or engineered inducement. And this is the engineered liquidity inducement. So let me start with talking about this not engineered inducement. The first step in validating an inducement is to get the retracement, to know exactly when where the retracement should end or where the retracement should stop. So for both the engineered liquidity and the complete liquidity, the inducement need to at least tap into the 50%, plotting from the high that's about to cause the inducement and the low that caused the high. So this swing structure right here, that's where you plot your Fibonacci, and price should come mitigate the 50% and then move up to at least 80%. It's 70 80 before coming down to tap into your point of interest. So right now I've already, with this 50% Fibonacci, I can already see that price has mitigated the 50%. So if price starts turning reversing from right here without touching my other block, and you already know that inducement should never touch your point of interest. So if price can turn from right here after mitigating at least 50% or more, it starts tracing to the upside. The next thing I need to validate will be the next. I've already validated that, yeah, yes, price is reacting or reversing from the right point of interest. So the next thing I need to validate is the retracement of the inducement. So right here, use my let me use my 100% Fibonacci. Sorry. So you can see price price mitigated, start from here, then validating the inducement. You can see that price started moving, mitigated up to the 80%, almost 90% before coming back to tap into the point of interest. So this is like, if I see something like this, I will definitely take the engineered liquidity, because to me the engineered liquidity is valid as long as, number one, price before the instrument starts forming, price mitigates at least 50%. For the engineered liquidity, even better, it mitigates at least 60%, 70%, but should not touch the point of interest. And while retracing to the upside, it should retrace at least 70% to 90%, 70% to 90%, or 100%. 100% when you have double highs, double tops, or double bottoms. That's when you have 100% retracement. When price will just come, give a double top, then reverse and come back to your point of interest. So for the complete inducement, we have just like the just like just like the engineered liquidity. For the complete inducement, come into this we need price to at least come into the 50%. The price level needs to be close to the 50% or inside the 50% of the Fibonacci level. Then it needs to break structure. I prefer using, for most of my entries, like from backtesting and other stuff. Like I've noticed that complete when you have a complete inducement, price tends to respect your point of interest more. So if you really want to take a plus setups, you take more of complete inducement or engineered liquidity that created at least double top, or maybe retraced like 95%, 90%. Those type of inducement are the one that likely hold. The inducement that the engineered liquidity that traces 50%. Let me show you what I mean by 50%. This type of inducement hardly holds in the market, like hardly holds. This type of inducement price retrace just 50% and comes back down. You will, I can almost say you will never see this stuff holding, but it's possible to hold because price is price always do what price likes. But you hardly see stuff like this holding, so you need price to at least, for engineered liquidity, you need price to at least move 80, 70 to 80%. In fact, best keep your expectation within 80 to 100%. If you have 100%, this is the one of the best. When price gives this 100% retracement, that's like price have created a double top, and double top or double bottom, it's like a drawn liquidity, a type of liquidity that is very nice to keep your take profit or the rest. So when you have stuff like this, it's very, very nice. If you have 90%, is nice too. 80% is nice too. 70% is kind of nice, but below that, you should just either leave the setup until it breaks structure or let it go. Because if you back test, maybe next week, I said that next week I'm going to be talking about, I'll make a video on how to back test properly and learn from it. Then from that video, if after I make that video, you can go and back test, and you will notice that stuff like this stuff like this hardly holds. Stuff like this is that when price just want to reverse on you to give an additional liquidity that retraces like 50-60%, then reverses on you. So these are like live example of the retracement happening. So right here you can see that we have this high and this low. I plot it, and the inducement tap into the 50%, making it valid. Then I'm taking a sell from a PY that is in the discount level. Same thing happened here when price mitigated. Let me show you. I've shown this like how many times. Okay, this is GU. If you look closely, we have a QMR setup right here, and this is inducement. This right here is the inducement from here to here, and the inducement mitigated the 50% before breaking structure. This is a complete inducement, and some people, this is actually an internal inducement. Some people might take it as So you might see it as another point of interest before the main point of interest, but it's not. As long as the inducement or that POI before the inducement does not tap into the main order block or the main breaker block, as long as it doesn't tap into the main point of interest, then it's just an extra inducement before the main inducement. Most times, price will use single candle inducement to do stuff like this, and I think this is the same kind of inducement, but it kind of looks like a V-shaped inducement. So this is same stuff. Just once you follow your rules, you miss trades, you take wins, you take loss. You at least minimize your loss and increase your wins. So right here, I still had the same stuff. When price came mitigated the main point of interest, I think on Friday, okay, Thursday, I was expecting. I did not see this as a valid pullback. I didn't see this as a valid pullback. Measuring it, I can't even say that this is a valid pullback. So I waited for price to do this, and I was waiting for price to tap into this. I think I made a short about it. I was waiting for price to tap into this, pull back down, then break structure, create a complete inducement, then come and tap into the other block before selling to the downside. But unfortunately, price just sold off. And the rest. So there's many example of complete inducement in the market. Many example of complete inducement. Like for the beginner stage, or let's say beginner stage of your, if you actually want to just take A plus setups, you need to make sure that your inducement at least break structure or move 80 to 100% before you consider it a valid inducement. So how to measure your inducement? You just plot from the low that caused the high, and the high that is about to cause the inducement. That's for a buy setup, and the opposite if it's for a sell setup. So yeah, there's many measuring them. I was just marking out the setups. They were valid stuff. I was marking them out. I kept marking them out. They are valid. They give inducement in the 50% and the rest. Oh, and let's try this big one. If I keep moving back in time, there is price. Most of the inducement. The only time when the inducement doesn't need to retrace 50% and other stuff. It's it's when price creates a new range, and that is range stuff. You need to go and watch the range video I made. I'll make another one, a better one, to explain more about the range stuff. But yeah, this stuff, I'm sure that most of you already know how to plot a Fibonacci to validate your setups. So this is not the real reason. So let's get into the validating. So number one, an inducement that happened before an MSS isn't valid. What do I mean by an inducement that happened before an MSS is not valid? This is this is what we have here on GU, on GPUSD. Something like this. Price was selling off. Price was selling off for a very long time, and price was selling off. Maybe it tap. So in GU, I'm kind of still bullish on GU. For some reason, I'm bullish on GU. But yes, I also acknowledge that the sales is possible. But I'm actually looking for buy. So if I see any buy setup, I'll probably TP my sell early and take the buy setup. So this is an unmitigated order block. This is an inducement. So this is a sell scenario. This is a sell scenario right here. So price was selling before price came to here, and price trying to make an MSS. So breaking this size what to consider the first break of structure, which is the MSS. And if you can see right here, price came, give a high. The high did not break the structure, so no MSS, and price came down and it's pushing back up again. Now, if price comes back down and tap into this, I don't expect it to hold. And even if it holds, I'm not interested in setup, because an inducement that happens before an MSS, an inducement that happens before an MSS is not a valid inducement. So if you can see from this stuff I drew right here, you can see that I was expecting for price to create an MSS, give an extra inducement, what I would call the main inducement, then tap into this cell, come down, tap into the point of interest before pushing back to the upside. So number one is an inducement that happened before an MSS is not a valid inducement. So number two is engineered liquidity should be at least 70 to 80%, preferably a double top or a double bottom. I explained this stuff. Now let me show you this. Let me show you this one here, right here. This is an engineered liquidity. Okay, I need to go 30 minutes for you to see it. Okay, this this is the high, this is the low that caused the high, and this is the high that pushing for the inducement. You can see that the inducement came, mitigated the 50%, and started pushing to the upside. So let's measure the retracement. Let's measure the retracement. Sorry. Okay, upside down. Okay, you can see that price moved. Price moved. Where it is. Where the price stop? Price moved 70%. You can see that price moved 70% here. Price moved 70% before coming to the into the other block. This makes it invalid. You can see that price tapped into it, reacted, but the point of interest did not hold because price just retraced about 70%. And there's another rule too that makes this POI right here invalid. This POI right here invalid. There's another rule that makes it invalid. The first rule is price needs to at least, for an original liquidity, price needs to at least retrace 80% of Fibonacci before coming back to the point of interest. So that's the number one rule. Then there's another rule that says when price takes out a a strong high or a strong low. If price takes out a strong high or a strong low and price gives you an inducement, price just took out a strong, this should be a strong high, right? GG took out strong high. So when price takes out a strong high or a strong low, and now give you an inducement for a point of interest, most time the whole setup is those setup is just liquidity. You should avoid setups like that, and especially if you have an inducement and engineered liquidity and engineered inducement after price takes out a strong high or strong low, that point of interest is not valid because the inducement is not valid. If you were to like on risk after price takes out a strong high or strong low, make sure that it's a complete inducement before you risk it. So another one is a structural range setup inducement should be at least 50%. What do I mean by that? What do I mean by that? So structural range, you need to watch that range video for you to understand structural range very well. But basically the first stop I drew when I was the first stop I drew, this this should be a structural range. Sorry. This should be a structural range. For a complete inducement, price should at least before an inducement should be valid, before an inducement for a complete inducement, for before the inducement should be valid, it should at least retrace 50% or below without tapping into the other block or without tapping into the point of interest, then break structure to the upside for it to be valid. And another way to validate a point of a inducement is that you should not use an inducement. You don't use a simple candle inducement when you have an MSS. That's very wrong stuff to do. Like when you just had an MSS and the first pullback you're waiting for is now a single candle inducement, you should not do that stuff. Most times it's actually liquidity. So and that stuff for a high probability setup, make sure your inducement always breaks structure or forms a double high or a double low. I talked about it when if you really want to take a plus setup, you won't take you won't take engineered liquidity. And if you want to take engineered liquidity, you need to make sure that it at least creates a double top or a double bottom. Sometimes double top and double bottom are not really perfectly in sync like one line or something. So you just have to make sure that it at least it traces 80%, 80 to 100% of the Fibonacci before falling back to your point of interest. And you already know that the next one is you already know that inducement should never touch your point of interest. Once an inducement touches your point of interest and it breaks structure like to your direction, just wait for another inducement for that inducement because that inducement already mitigated your point of interest. So except your POI has a long week, the inducement should not touch your point of interest. That is what it's just different when your inducement has long week. When your inducement have long week, price can tap into the week and create inducement, then tap into the body. That is still valid. Then when the market is trending well in a particular direction over a period of time, avoid the gradient liquidity if you must take it. When prices this there are many of these examples on think about backtesting G aggressively, backtesting a lot. So I know there's many. I saw many of them. I saw many of them. For example, we have this price have moving in one direction for a very long time. So price now give an engineered liquidity. Avoid it. When stuff like this happen, avoid it. Don't no need picking another block down here or something, expecting price to reverse to the upside. There are other reasons why this stuff failed, but one of the reasons is avoid engineered liquidity when price has been trending in one direction for a very long time. You just avoid it because price can just do a deep retracement. The kind of deep retracement I'm talking about is that's why this GJ. I'm still very bullish on GJ because all price just did is they just did a retracement, took out daily liquidity, and right around here should be a point of interest that price is trying to buy from. So even this sell, I'm not really sure of it, and where I'm expecting major sales is from this point of interest, not from the FVG or the point of interest. So that's it for today. See you on the next video, and please like and subscribe. Sorry, today's video I'm very tired. I just have to make this video. I'll make a better one hopefully. So please like and subscribe and see you on the next video.